Hi there, welcome to Kneppy Invest. Time for another technical and portfolio update. We'll look at the performance of three of my portfolios using different strategies. Also just might, take a gander at the group portfolio. And then we'll look at charts, lots and lots of charts, maybe about 20 to 25 charts, including indices, commodities, uh, bonds, and then individual companies on the ASX. Some that are looking interesting, some that I have never looked at before, but we have seen the share price take off because of either some announcements or just a little bit hype in the investing community. And we'll discuss those particular companies. And that's it. So let's have a look at the performance of my three portfolios, starting with the long-term portfolio. So this is focused on finding high quality companies and holding those quality companies for as long as possible. Now, I am comparing the performance of these three portfolios to a benchmark, which is the STW. Now, a question you could have is maybe I should be comparing particularly my medium-term portfolio to a different benchmark focused on small caps because that is focused on small cap companies. But this particular portfolio, the benchmark I definitely will use is the STW, which is the ASX 200 ETF. That has a dividend. And the reason why I want to use that benchmark is because if I can't beat this particular benchmark, I might as well just put all my money into an ETF. Now, I am beating the particular benchmark, but both are down. Now, a pretty bad week on the ASX with the benchmark, the SCW down 1.5%. My long-term portfolio is only down 0.36%. Now, the SCW has given a more significant dividend compared to my long-term portfolio, but there's also a nice currency gain in my long-term portfolio because not only am I invested in ASX companies, I'm also invested in companies listed on overseas exchanges. Best performing companies in this particular portfolio should be no surprise that the leading company is Pro Medicus. Then we have PWR Holdings, Nick Scali, Breville Group, REA Group, and Domino's Pizzas. Worst performing company is WiseTech, and then we also have Resmed and Clinuvel. Resmed actually does look interesting, and I'll also be showing you the chart for Resmed. International companies, best performing company is still Alphabet, going gangbusters, up 20% since I bought. And the worst performing company probably is still Shopify. But that's the sort of company I aim to hold for hopefully 10 to 20 years in online shopping, that sort of thing. Now, onto the performance of the medium-term portfolio. So the companies I choose to have in this portfolio typically are small cap companies that have the potential, hopefully have the potential, to become high quality companies in the future. This is my favorite place to invest, if I'm honest with you. I love investing in small cap companies just because of that promise. Typically, and more than usually, I don't invest in story stocks. I like to invest in companies that at least have a little bit of revenue, growing revenue at that, and on the cusp of becoming at least operating cash flow positive. So this portfolio has typically outperformed the market, up 4.26%. And this is the portfolio where maybe the benchmark should be the XSO or something to do with small caps because I should be comparing myself to that sort of benchmark because most of the companies in this particular portfolio are smaller cap. So still, this portfolio is significantly outperforming the STW, up 4.26%, although the last week was down a little bit. So down maybe 2%, and which is understandable because the overall market was down a fair bit, if I remember correctly. I'm pretty sure. We'll have a look at the XGO later. So the overall market in the last week was down not as much. There was a nice little recovery in the last few days, but still down 1.3%. And I have noticed that usually if there is negative sentiment in the market, small cap companies tend to get sold off a little bit more than the bigger companies, which does make sense in the end. Now, the best performing companies in this particular portfolio is, well, the best performing company is a company I sold out because there is a takeover bid for that company. That's Energy One. I am still thinking of getting back in that company, particularly if that takeover bid fails. Second best performing company is Email Payments. Then we have Doug, Ansarada, Audinate, Atlas Pearls are still doing really well, even though share price fell something like 10% on Friday. EZZ Life Science. So you can see a lot of these companies' markups are fairly small. Atlas Pearls, maybe 20, 30 million. EZZ Life Science is really low as well. Aussie Broadband is up there as well, but that's a much bigger company. In fact, the market cap of the company is probably $1 billion. So a lot of really good performing companies within this portfolio. There's also some bad performing companies, and by far the worst one right now is Ventura. Also has Western African Resources in there, down 23%. Gold producer in West Africa, Burkina Faso. And I think that company looks intriguing. Well, valuation-wise, looks really intriguing right now. And no holdings in overseas exchanges. So only ASX-listed companies am I willing to hold for or in this portfolio. And then onto my short-term portfolio, which is trade or using a trading strategy. Now, to be fair with you, I'm not paying as much attention as I should be with this with holdings in this portfolio, because there's a few companies I probably should have sold out by now. My trading position, and those companies include James Hardie, which has gone down a little bit, and probably Australian Ethical as well has fallen a fair bit in the last few days. And Vista Group, my trade in that probably has been a bit of a fail. But overall, the performance of this portfolio has been absolutely stellar. Up 7.4% compared to the benchmark, down 1.5%. So I can't really complain about the performance of this portfolio, but I probably should spend a little bit more time on this. And that's my main thinking right now. Be a little bit more active. That's probably bigger problem is spend a little bit of time on this portfolio and be a little bit more active, which is against what most experts would say. That most experts probably would say be less active, not more active. Anyway, so that's the performance of the portfolios. Let's have a quick gander at the group portfolio. So this has been going for, 2.5 years almost, down 19.33% on a per annum basis. So down a fair bit. When you look at the total value of this portfolio is 57,522, started at 100,000. So down 43%, which is not good. Not good, but again, and I think I've mentioned this in a previous video, the main reason why this portfolio is down big is because a lot of these companies are storage stocks. I'd still call Zip a storage stock, even though it does have revenue, that sort of thing. It's still not profitable, and it's still a story. Aries Resources has been significantly disappointing. That's not a storage stock. It's just been a disappointing company. Imogen Biosystems, Point Terra, which is a company I do own, Alcidion, BrainChip, storage stock, Novonix, story stock, even though it has a little bit of revenue, still a story stock. So quite a few story stocks in this. And the best performing companies are only best performing because of the dividends. In fact, if you take away the capital gain, all companies are down. In fact, the second best performing company when you look at capital gains is Fortescue Metal, and that is down, the share price down 4.42%. The best performing company is a company that has or is no longer on the ASX because it's been bought out. Okay, anyway. So let's have a look at some charts, starting with the XJO. This is the weekly chart. So the XJO has been trading in a range. When you look at the weekly chart, well, no matter what time frame you look at, the monthly, weekly, daily, has been trading in range since 2009. And right now, it's sort of in the bottom half of the range because the XJO has actually had 3 down weeks in a row. So down 2.9% 3 weeks ago. 2 weeks ago, down 0.3%, and the last week down 1.34%. However, there was some positiveness in the last 2 trading days, so 2 up days in a row, and it has bounced off the bottom of a sort of a support zone. That support zone is between 7,000 and we'll say around 6,900, and it's just bounced off 6,900. So that's maybe a positive sign moving forward for the XJO and the other Australian indices and the ASX. And the main reason I say it's looking positive is mainly because the NASDAQ was up 1.7%. I would assume the Dow Jones was up pretty big as well. In fact, we can actually look at the Dow Jones. Let's have a look at markets. Dow Jones up 0.87% and the S&P up 1.2%. So more than likely, we will see some good positiveness on the Australian markets on Monday, which is tomorrow, 9th of October. There's no public holiday, is there? No. Excellent. That's what we like to see. So So looking good now for a little bit of a bounce in the Australian markets. How long that bounce will last, who knows? So XGO is not looking as negative as if as if 6,900 would be, been broken the last few days, which I was thinking it could have happened. But otherwise, if you do look at this and just take away the sort of the support zone, it does actually look a little bit more negative. In fact, a little bit more bearish than it has for a while. Now, as I mentioned before, maybe my benchmark for my medium-term portfolio should be the small caps. And if I compare the performance of my portfolio or my medium-term portfolio to the XSO, it is significantly outperforming it because the XSO looks significantly more bearish than the XJO. In fact, it's moving towards a fairly strong and significant support level at 2,600. The reason that's significant is because we saw the XSO fall to these levels back in June and October last year, and now it's getting towards those levels right now. And in fact, if you do look at the XSO daily chart, it's actually still in a downtrend. It has been a downtrend since well, the start of 2022, which sort of makes sense. And if we look at the weekly for the XSO, yeah, it looks pretty negative as well. So, and if it falls below that 2,600, that support level, we really only have the COVID-19 period and the recovery left. So probably the most bearish looking indice on the ASX. And NASDAQ, after that really good last day of trading, which was really good, NASDAQ up 1.7%. And it's just bounced off the sort of the green zone here, the two moving averages I use for that sort of the longer term moving average. In fact, so we're talking about the blue line is the 150-day moving average. So we're talking about the 200 and 100 moving average. And that's sort of my long term trend, which I do use. When it's in green, it's just saying whatever you're looking at is in a long-term trend. And if you look at the other moving average envelope, which is looking at shorter term, that's the shorter term trend. And it did look sort of negative on the shorter term. It did turn red, that envelope, which is telling me there's a little bit of weakness in the short-term trend. And if we started to see that shorter term moving average envelope fall below the longer term, that would be the next bearish signal. But really good day on the NASDAQ. In fact, it pushed the NASDAQ to a 2-week high. Last time the NASDAQ was this high was back in 20th of September. So go the NASDAQ. Now to some commodities, starting with the iron ore. So iron ore is still looking, we'll say, slightly bullish, but definitely not as bearish as some of the other ones. Uranium has fallen in the last week. And this is exactly what we expected because you'd see it accelerating or exponentially growing over the past 1, 2, 3, 4, 5, 6, 7 or so weeks. And when you ever see anything exponentially rise like that, you're always going to see a pullback. And we started to see that pullback right now. A pullback could last a few weeks, just like the pullback we saw back in April of this year. You'd see another exponential rise in uranium, and then it pulled back. So I'd get more interested in uranium companies, say Boss Energy, Paladin, if uranium pulled back to, say, 58. Say that level, 60 to 58 would be interesting. Right now, it's 69.45. Oil, we look at the daily chart for this one. A really nice pullback in US oil. Is this sort of a dip? We saw another dip back in start of August, and that was the time to buy at the bottom of the dip. Is this the bottom of the dip? That's the big question when it comes to US oil, and that's a big question when it comes to companies like Santos, Woodside, and Karoon Energy, and a few others. I'm not sure if I will be looking at any of those companies' charts, but I am keeping a very close eye on Karoon. Maybe that's the company I might take a position. So possible change in trend. Not trend, really. Not yes, that's wrong saying change in trend because it's short term, a very short term trend. Just trying to change the size of my head there. So this could be a buy the dip opportunity for US oil. Lithium just keeps on dropping, and we can see it dropping just by looking at the weekly chart. It's dropped now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 15 weeks in a row after a little, what's the opposite of buy the dip? Sell the dip, sell the rise. Dead cat bounce. The opposite of buy the dip is sell on the dead cat bounce, and that happened in June for lithium. Yeah, this is bearish. Keeps dropping. Lithium. Gold had a tough week. A really tough week. Quite a few down days in a row. I think the bottom has been reached. The short-term bottom has been reached because gold did rise on Friday. So hopefully this is the end of this short-term weakness in gold. But looks much more bearish than it did a few months ago. And coal. I was actually a little bit interested in coal companies because it did look like coal, the bottom in coal prices had been reached at around 120, and then there was a little bit of a signal that coal prices was rising, but coal prices have fallen in the past week and a bit, and you can see that in the weekly chart. So coal prices fell 11.5% in the past week. So possibly the little bit of a nice little, very small bullish run has come to an end for coal. Now on to bonds, bond yields. So this is the weekly bond yield, American 30-year, and it's still looking really interesting. Just on a bit of a tear. Last day, on Friday, up another 1.67% to a high. In fact, at one point in the day, it was over 5%. Pulled back a little bit to 4.97%. But yeah, this is really interesting what's happening in the bond market. And the same thing can be said about the Australian bond market, and which is understandable. It should be mirroring, not exactly mirroring what's happening in America, but the 10-year Australian bond is looking fairly bullish as well, which means the TLT ETF, which is the ETF I would play if I thought the top in the bond market had been reached, I would be buying this. And because the bond yields are going up, bond prices are going down, and this particular ETF, which is a TLT, is going down, really negative. And if we look at the weekly TLT, it's pulled below a nice support level. That support level was the lows we saw way back in 2011. You can see if you go back to 2011, the reason I put that level is the TLT hit that level, which is like 88, 1, 2, 3, 4, 5, 6 times between 2008 and 2011, and it remained above that level and stayed above that level until now. And in the last day of trading on Monday, the 2nd of October, well, that's the weekly. Yeah, that's the weekly. So it fell through that level on the Monday and just has kept on falling. And of course, this is inversely related to bond yields. So if bond yields keep on rising, this will keep on dropping. So if we expect a significant recession and then interest rates to start falling, this could be sort of a play. Yeah, definite play. Now onto the individual companies. Itchy back. There was a suggestion, recommendation, a suggestion, whatever you want to call it, in regards to Resmed in my last video that I released last Sunday. So here is Resmed. Yeah, I am intrigued by Resmed because of the significant shift in sentiment around this company. Really started on the 4th of August. Share price decreased 9.3% on that day on the release of some negative news and just kept on falling. Massive volume coming in. We did see a little bit of a bounce. So on the 26th, 27th, and 28th of September, a bounce on really good volume as well. And as that volume dried up, the share price of Resmed has pulled back. And that's not a bad thing to see. It just pulled back on lower volume. Now, the question is how much value is in Resmed? And I think that's the big question. Also, shorting on this company has significantly increased because of those diet drugs. So a lot of people out there who think that Resmed will be significantly negatively affected by these diet drugs. How long that's going to take, who knows? But I have heard some really positive things about these diet drugs. So I'm going to have a closer look at these diet drugs. Not personally, but just how effective are they? And maybe that's just someone who's invested in it. I don't know. Anyway, so Resmed, nice bounce. The very fact that we didn't see a massive sell-off after the bounce is telling me those who want to sell out more than likely have already sold out, and that bounce could be just short sellers. getting rid of their position as well. The other thing I should mention with Resmed is I'm pretty sure they have announced when they're releasing their next quarter results. I still remember announcement in regards to this. So let's have a look at that. Resmed to report first quarter fiscal 2024 results. I'm pretty sure it's like the 27th of October. So Thursday, October 26th, which is America time. Sydney, Friday, October 27th at 7:30 a.m. Looking forward to that for Resmed, because I'm a shareholder now because of this drop in share price. I do see value. The market could be wrong. And yeah, the PE ratio is only 25, which is actually fairly low for this company on a historical level. Magellan Group, so I've been following this very closely. I did a very, very quick trade, a one-day trade in Magellan Group. The volatility in this company is really intriguing. So we did see it for those 2 consecutive days on the 21st, 22nd of September. It's down about 17% over day. And then on the 26th of September, share price rose 7.7%. And we also saw the share price rise 8.1% on the 3rd of October, and then drop 8.8% the next day, and then further 6.1% the following day. Share price has fallen to $6.09. So right on the lows we saw on the 26th or the 25th of September. So, it's going to be interesting to see where the share price goes from here. So a nice little bounce, call it a dead cat bounce. Volume wasn't that high, and then pull back. So a bit of negative sentiment in Magellan Group. If the share price does fall below $6, which was the lows we saw, there could be a bit more negativity in this company. The other thing to notice is volume has started to really rise. If you look at the weekly chart, you can see the volume rising the last, say, 2 months, almost comparable to October last year, which was a breakout. So, say between July and October, we did see volume rise, and that was a breakout in the share price. You can see the share price went sideways for a long period of time, and then when volume started to rise, that's when we saw the share price take off. So volume is very important. Always look at volume, in my opinion. AMA Group, I almost, if the share price went above 13 cents back in August, I might have taken a position in this company, but it didn't, thankfully, because then the company did a capital raising, a highly discounted capital raising. Share price on that day when the share started trading again was down 43%, and the share price just kept on falling. In fact, you should have sold it on that day, and even if you sold at the bottom of that day at 6 cents, you would have been much better off, because the share price has fallen from 6 cents to 3.7 cents, which means the share price has fallen about 35% since then. So much negative sentiment in this company right now. Market cap is only 65 million, but this company has a lot of debt, and that's the main thing. If this company had no debt, I would be going all in on AMA Group with a market cap of 65 million. National Tyre and Wheel, nice little pullback after the share price rose significantly on the back of, was it a deal with Dunlop, if I remember correctly? Share price has pulled back to 77 cents. Is this a buying opportunity? That's the question I have for National Tyre and Wheel. A market cap 102 million, and that's on a revenue of 582 million, but a profit of 3 million in 2023. So this company does this on very low margins, but it's profitable. And there was some positive sentiment behind this company. So that's National Tyre and Diagnostics, or Wheel, not Diagnostics. Onto a company where there is negative sentiment, and that's Qantas. The sentiment of this company has just changed significantly, and that's understandable because of all the negative press Qantas has received. But the question is there value in this company now? With a PE ratio of 5.4, is there value? I won't answer that question for you. I'll let you answer that question for yourself. I'm not the biggest fan of airlines, put it that way. I have never held Qantas. There's only one time in the past 10 to 12 years where I was thinking about buying Qantas, and that was way back in 2015, 2014. You can see if you look at the monthly chart, 2013, 2014, where the share price actually fell almost to $1, and that was peak negative sentiment in this company. Questions about the long-term survival of the company back then, and that was the time to buy this company at $1 or just above $1. So share price significantly above that. But yeah, I don't have an opinion of this company right now. All I know is the share price has seen a significant tumble, significant fall in the last, we'll call it last month and a half. Now to companies I don't really follow all that closely. This is a company called Tombador Iron, and the share price fell 33% on the 3rd of October. Now the share price the chart looks pretty bad. Weekly chart looks bad. Daily chart just looks bad. It's in a beautiful downtrend. When I say beautiful downtrend, just well-defined downtrend. And so what happened with Tombador? I have no idea. Let's have a look. Let's have a look together. Tombador Iron fell another 6.7% on the, let's have a look at the trade history. So fell 37% on the 3rd, rose 25% on the 4th, and then fell 6% on the 6th. So nice little bounce on the 4th. So what happened to Tombador Iron? Operational update at 12:04 p.m. Tombador wishes to advise in the ASX announcement on 4 September, project experienced constrained production. So lower than, maybe not lower than expected production, because I mentioned they did state this in the 4th September. So this is just an update on the production, and the market didn't like it. Cost of the cutback operations tax and other expenses has resulted in a cash balance in the range of $14 to $15 million at the end of the quarter. So maybe that's why the market got a little bit anxious about this company and sold off, because of that cash balance, which is an indication of how much cash they are burning. I don't know this company at all. Maybe at the end of the previous quarter, the cash balance was $30 million. So cash has fallen $15 million in the last quarter. I'm just assuming, not assuming, I'm just making an example that maybe that's why the market sold off, because the cash balance has fallen significantly for this company. Next company we want to look at is ADA, which is Adacel. And have a look at this chart. So this does look negative. So this is another example of a well-defined downtrend until the 4th of October, when the share price rose 24.9%, and the share price rose another 6.4% the next day, and then another 0.67% the next day. Actually fell the next day. Is this a breakout? This is a potential breakout. Now, the last time the share price was this high was not that long ago, February of this year. So we are talking about an 8-month high. So it's at least greater than a 6-month high. That's one thing I'm looking for. I would have preferred larger volume. That's the one thing that you could say is negative. But at least the volume is significantly higher than what you normally see for this company. So what caused this interest in Adacel? I'm pretty sure it was a deal with, so this company sells, what do you call those airline towers? That's it, airline tower or airport towers, simulations, that sort of thing. And Adacel awarded new FFA contract for tower simulation system. I don't think I've ever mentioned this before. I actually worked for FFA for a very brief period of time. It was in regards to a research in turbulence in Juneau, Alaska. And so technically I worked for the FFA for about 4 months as we conducted research in turbulence in Juneau, Alaska. And the reason they were conducting turbulence research in Juneau, twofold. Juneau is the capital of Alaska. You can only fly in or take a boat into Juneau. It's cut off. And the main reason is because mountains. And the other reason they studied turbulence in Juneau, Alaska is because it rains there all the time. And because it's so mountainous, and because mountains cause turbulence, there was a lot of turbulence that you can see within the rain fields. So I was using a mobile Doppler radar to capture turbulence in the rain fields. It's absolutely fascinating. Anyway, so that's why there was a lot of interest in this company, because of this new FFA contract for tower simulation systems. Now onto a company where there was no news, but a possible buy the dip situation with AUB Group. There's AUB Group, Steadfast. These are insurance, what do you call it? Insurance contractors. There's another word for it. Sometimes words just get lost. Broker, that's it, insurance broker. So there's AUB Group, Steadfast, and there's another one, PSI. What's the name of that company? PSI, something like that. Anyway, if you do look at Steadfast, we'll have a very quick look at Steadfast. Steadfast actually looks a little bit bearish right now, possible move into a downtrend. So AUB looks really good, and a possible buy the dip situation with AUB Group. You can see 3 buy the dip situations in the past. Buy the dip, buy the dip, buy the dip. Is this another one? And in fact, the share price did bounce a little bit on the last day of trading, up 1.4%. So maybe it's just bounced off the 150-day moving average. So possible buy the dip situation for AUB Group. So for those who are interested in this company for a long-term position, maybe now it's time to think about taking a position in this company. Now it's a company called Biotron. Look at that chart. Okay, so this is more than likely I would not be interested in this company simply because I don't think they have any revenue or anything like that. Yeah, loss making, no revenue. But look at that chart. So this is a potential breakout. In fact, the breakout started on the 26th of September. Share price on that day rose not 29% and closed at 4 cents. So the share price has increased from 4 cents to 9.6 cents after the initial breakout. And the reason that was a breakout, well, it wasn't the sort of breakout I'm looking for. Typically, I'm looking for a breakout where there is positive news, particularly positive financial news. But if we look at Biotron, I don't even know what this company does. It's more than likely medicine, health, that sort of thing. This company released no news flow. In fact, the company has received 2 ASX price queries in September because of this significant rally in the share price. Who knows what's happening? There must be something happening with this company. I don't know. I don't follow this company too much, but more than likely this company is in research and development of a drug in health, engages in the research, development, and commercialization of drugs targeting significant viral diseases with unmet medical need. So something's happening with Biotron, just don't know. Let's have a look at the weekly chart to see the history of this company. So a lot of interest in this company back in 2018. You can see the share price went from 1.5 cents to a high of 43 cents in a very short period of time. So this company has gone through these hype periods in the past. So if you bought back in 2018, not even near the high, say you bought at 20 cents, you've been under ever since then. So maybe you've been waiting for the share price to rally like now to sell out. You can see even spikes in volume in the past as well. Spike in volume in 2020. It's another spike in volume in 2021. So anyway, so no news flow from Biotron. What's causing the interest? There must be some cause behind it. I just don't know at this point. Unlike Dimetrix, this is a company, an announcement I should have noticed. I did not notice this announcement. And look at this chart. This is another beautiful chart. And this, I think, is probably the end of the downtrend for this company based off the specifics of this particular announcement, which I did have a look at before the video or recording this video. I had a look at the announcement and went, why did I not notice this particular announcement? This is the sort of announcement I'm looking for. A very similar announcement to some other companies I bought into, and it was a license agreement for EU, Canada, ANZ. Not only is this a license agreement, they put numbers in it. That's what I want to see. I don't want to see just words. I want to see numbers. So this is, I don't know anything about this company. So Advanced Pharma acquires exclusive rights to register and commercialize DMX-200 for the treatment of focal segmental. I'm not going to try to pronounce that word. So we'll just call it FSGS in the European Economic Area, UK, Switzerland, Canada, Australia, New Zealand. Now we get to the numbers. This is really important. And this is why I'm surprised I did not even see this announcement. Dimetrix, probably pronouncing that wrong, Dimetrix, to receive up to $230 million in upfront milestone payments, plus royalties. I wonder if they have a royalty number here. 6.5 million. This is euros, so 10.8 million Australian in upfront payments. 219 million in potential milestones and tiered royalties on net sales. The only thing I'd like to see here is what are these tiered royalties? I don't know if they have it here. Anyway, so this is definitely an announcement I want to pay a little bit more attention to because this is a potential breakout. This is potentially significant news for the company. And you can see that with the trade history. So share price rose 154% on the 5th, which is the Thursday. That was a Thursday, right? This is why I did not notice this particular announcement, because I actually worked 12 hours on Thursday in my real job. And so I just did not notice this announcement. Share price rose 154% on that day, a further 19% on the Friday. There is power to this announcement. You can just see the volume here. Volume went from 820,000 shares on the 3rd, the day before they went into trading out, to 72 million on the Thursday, and a further 60 million on the Friday. Just look at the volume when you look at the chart. Massive volume. This is a significant announcement for this particular company. This could be a company making an announcement. Not only that, the market cap of this company is only $73 million, according to TradingView. I should do a standalone video on this. I'll do a standalone video on this company when I look at the announcement a little bit closer. So it looks like, according to Comsec, the market cap is 73 million. This could be a potential buy. Potential. We'll say potential at this point in time. Now, on the flip side of a company releasing positive news is a company releasing negative news, and this is Magellan Financial Group. For some reason, there was excitement in this company when they released their financial results on the 18th of August. Share price rallied 13.3% on that day. I'm not sure why. I looked and I went, why is the share price rising? And then it faltered fairly quickly. And then the share price nosedived on Friday, the 6th of October, fell 18.5% to a long-term low. When we say long-term low, we're talking about a low. Share price got to $7 at once. The last time the share price was $7, you have to go way back to 2013. We are talking about 10-year low for Magellan Financial Group. So what caused this share sell-off in Magellan? There is an announcement or type of announcement this company releases every single month, and that is funds under management. So this company did release a funds under management for September. I did see this announcement. This is the sort of announcement I am expecting from companies like Magellan every week. And what do you think happened to funds under management for the September month? It fell. I think possibly the market was surprised how much it fell. So total funds under management fell from $39 million to $35 million. That's a significant amount of outflow. So Magellan experienced net outflows of $2 billion, which included net retail outflows of 0.3 and net institutional outflows of 1.7. So total funds under management was more than that. So there was something else there that caused 4 million outflow, but they only said 2 million outflows. I'm not sure why there's a little bit of a difference there. Maybe it could be just cause. The reason why total funds under management fell $4 billion, but they say net outflows of $2 billion, it just could be underperformance of the funds. So the underperformance of the funds was that $2 billion gap. That's probably the explanation behind why there's a difference between funds under management and total outflows. So really negative for Magellan Financial Group. And this is, again, I'm not interested in funds. I'm not interested in this company until they can show that the funds under management is no longer falling. Azure. I started to hear a lot about Azure. A lot of people talking about Azure Minerals. And I think it's late. Maybe too late. The time to start talking about Azure and thinking about Azure was back in April, May of this year when the share price was 34 cents, when the share price broke out. This is share price breaking out. You can see volume increasing as well. And then too much hype. This was a potential breakout as well. On the 13th of June, share price rose 33% on that day. That was a potential breakout, high volume. I missed it. I don't pay much attention to this company, Azure. I'm pretty sure they're lithium. I could be mistaken. Let's have a look at TradingView, see what they say. Explores and develops copper, silver, zinc, and gold. I thought they would have been lithium. If it was lithium, that'd be unusual because share price has risen a lot when overall negative. There's been overall negative sentiment in lithium. Oh yeah, it's lithium. Andover delivers more outstanding lithium results. TradingView is just a little bit behind when it comes to this company. There is potential. This company was exploring for those other commodities or minerals, and then they transitioned to lithium because lithium's the in thing right now, and maybe they've had success. But I had heard good things about this company in the past, particularly around a deposit. But chart looks starting to look potentially weak. So putting a couple of lines here. So it's trading in this range since late July, and it's right at the bottom of the range right now. But if it falls below $2.30, that would be negative. So maybe if you are really positive now, maybe now's the time to take a position in this company. Any other interesting announcements? What happened on the 13th of June? Let's go back to the 13th of June. So we have to go to 1 year. I've never had a look at this company in the past, so let's have a look at 13th of June. Exceptional lithium drill intersections form from Andover. That was a time to take a position, if not just before then. Anyhow, that's Azure. Another company saw a significant increase in share price is Painchek. Ticker PCK. Share price has taken off. Share price increased 21% on the 21st of September and then consolidated. You can see this sort of a flag pennant pattern, which is really bullish. So not a lot of selling. And the reason the share price went sideways at this point was if you go back to December 2022, that's the share price high in this little rise. Then the share price pulled back. And the share price has taken off, which is understandable. I don't think this company makes much revenue of $1.9 million in financial year 23. Now, on to what caused this rise in share price and what's caused this bit of hype in Painchek. I'm assuming, without doing any research, this company has some sort of product where people can check the pain in their body. I have no idea. Just making that up. No announcements. They did receive a price query on the 21st of September, which is, well, that was on the day when the share price rose 21.2%. And then the share price went sideways. So this company has released no announcements. Let's see what this company does. Investor presentation webinar. What you could do is just have a look at, bring up one of these announcements. Say the response to ASX price query. There's a few ways you can just figure out what a company does. Go to the website, go to the prospectus if they're recent IPO. For some reason, just moving on. Okay. Painchek is an Australian-based company that develops pain assessment technologies. A Painchek app uses artificial intelligence and facial recognition to detect pain in those who cannot self-report. This gives a voice to those who cannot verbalize pain. Was also driving, oh, this is really interesting. Yeah, interesting. A complete point-of-care solution that combines the existing Painchek app with the numerical rating system. Might have to do a little bit more research in Painchek. That does sound interesting, in my opinion. Anyway, Painchek's share price has taken off. Let's have a look at the weekly chart. When's the last time share price was this high? Well, look at that massive peak in late 2019. The last time share price was this high at 4.8 cents was February 2022. So we are talking about nearly a 2-year high with Painchek. The other thing I like to look at is volume. There was pretty good volume on that 21st of September, but I would like to see continued high volume. Now to a company that saw the share price dive heaps, and that's Avita Medical, down 19.9%. I'm pretty sure this was on a delay. It's really interesting because I thought this could have been buy the dip situation. Share price moved into this green zone, the longer term moving average, which is a potential support zone, and then the company released, and the share price started to bounce, and then the company released a negative announcement, and that negative announcement, I'm pretty sure, was a delay in something. The title of this announcement was Statement of CDIs on Issue. Is that it? That can't be it. When did the share price dive? It dove on the 3rd of October. According to this, there's no announcement on the 3rd of October. Oh, Form 8K. They released at 3:56 p.m. on the 2nd of October. So the shares would have been put into a halt, and there would be no trading on the 2nd, and the shares opened up on the 3rd down a fair bit. So this is the announcement that caused a bit of a panic in the market, even though it's not marked sensitive, which is ridiculous. Obviously, it was sensitive information. And the form describes a recent US FDA letter to the company that is requesting additional information on its pre-market approval supplement application for its latest device, RECELL Go. So it's just because I think it's a little bit of a delay, maybe a 6-month delay. Maybe an opportunity has opened up because the market panics on these sort of things. It's just a delay. And the last company I want to check, as my laundry has just finished, is Perpetual. The reason I've included Perpetual is I am doing a financial year 23 result video on this company as requested by a viewer of this channel. And then I had a look at the chart in preparation for that video, and I noticed the share price of Perpetual is at a really interesting level right now at $20, a round number. The reason it's interesting is if you look at the weekly chart. In fact, maybe even the monthly chart. Let's have a look at the monthly chart. Yeah. So if you look at the monthly chart, going all the way back to 2009, what's happened to the share price of Perpetual during that period? Share price has fallen to $20 on 1, 2, 3 occasions, actually 4 occasions in the past, and has rebounded off that. Now, you could say back in 2009, share price rebounded just above $20. In fact, the low was $21.60. But definitely we saw a bounce in 2012. We saw a bounce in March 2020, the COVID-19 financial panic, and then we saw a bounce in March of this year. And you can just, if we go to the daily chart, you can see that bounce in March of this year. In fact, the share price went from $20 back up to $26.50. Is it going to happen again? Pretty big volume coming in as well. That's a sign that someone out there knows that $20 is a really good, strong support level for this company. So potential buy, but this is a potential, because the share price is going sideways over the last 2 or 3 weeks, there's not a lot of buying coming in. So high volume, but not a lot of buying, which means that there are people interested in buying some shares in this company, but there's enough selling to take care of all those buyers. And I think there's potential that $20 might be broken for Perpetual. So watch out for that video. That's our financial year 23 video, which I should be doing for Perpetual in maybe a week, week and a half. Anyway, that's all I have for this video, this technical and portfolio update video. If you have any questions about any companies or anything I've mentioned in this video, just leave those in the comment section of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified, and I really want to itch my nose, so I'll end it right here. Have a good day. Bye.